Morning, everyone. It's Chris from Axel as well as Solstice. You can find us on both websites, axelatrai.com or solstice.axelatrai.com. We are using a new website since we have a new server. We have not moved yet, solsticeatr.com over. Remember, this is for educational use. We're not a broker dealer. Past performance doesn't give us any indication of future results. And remember, next week is a short week. I hope everybody enjoys their Thanksgiving with their family, loved ones, and be grateful. Remember to smash the like button, give us your commentary, let us know, and share with your friends. Let's go to the first slide that I have up here. And what I did, I put the E-mini, which is the Fortune 500 company. You can use the electronically traded fund, which is SPY. I wanted to show the market profile up here, showing the highs as well as the lows. This is the low for the 3-month. This is the high for the 3-month. And at the same time, I wanted to show where the value area high on that 3-month candles and the value area low on the profile, which shows you the high and low on the volume profile and the point of control area where most contracts were bought and sold, and that's a node where the high is. In relationship to the time spent, you can see the time spent low is in a different shadow. It's in the bottom, and that's the time spent high in relationship to the 24-hour trading between the global markets and domestic markets in the US. The most cumulative time was spent was right on that yellow marker. If I take the high and low, I can see that we are a little bit below the 50% on the 3-month, and this is a double bottom here, as well as here almost a double bottom. This is when the Fed announcement was announced last month. This is the low for last month. This is the high for the last month. If I take the highs and lows, we are sitting inside the value area low on the S&P 500 because there are different sectors rotating in the S&P, such as XLV, which is in the healthcare sector because it's more in the defensive. And you can take a look at all these sectors up here. You can see all the sectors on the S&P as well as the NASDAQ 100. We have, the Magnificent Seven I've included in there, Netflix in them. But you can see that the Thursday candle that took us down, it's a big, large candle, a big wick, and a body down here. We closed down here. When we went back up into the sentiment to try to push back in, we went halfway back into the single print on the S&P, but couldn't close, but we closed right up here at the 6631.5. So let's see what Monday brings. And remember, this is a short week holiday, so your trading will be on Thursday off, and Friday is only half a day. So trade what the charts offer you. Let's go to the next slide. And I put here the NASDAQ 100. It's in a similar situation. You can see where the value high and value low and the point of control where most volume was. And you can see on last month high and low, the NASDAQ touched the last week's range, the high and low, and bounced off the 116 simple moving average to close inside this candle, but could not get into the single print. You can see where the high was here and the low of it. We went halfway to it, couldn't get to the single print that we fell from on that candle, and we closed right here at the 24,349 and a quarter. So I am paying attention to this area in case there's a rally back up. I'm looking for the backside of this candle if we can get back to it. If there's a rally and a rejection, if there's going to be a breakout, then you look for the backside of this channel, because the 18 and the 50 are above. This is the 50 simple moving average, and that's the 18 simple moving average. We got the 116 between the 50 and the 116. There's an 83 SMA right there. So remember that. If I do end up failing the monthly Fib and this gap where we tested, we can continue lower to the backside of this consolidation here in the double bottom on the NASDAQ 100. Let's go to the next slide. And what I have up here, I put the NASDAQ 100 on a 5-day market profile showing you the single prints here and where the large nodes are and the point of control are in relationship. When we went back up, the Nasdaq could not make the 50% from high to low on the weekly, tested the backside of this consolidation, the 24,607, missed it by a little bit and fell back in to the backside of the 18 SMA. So I am paying attention to this profile if it's going to create a shoulder to continue and go in that single prints back to the upside or not. And if we end up losing the lows, pay attention to it. Let's go to the next slide. And I have up here the Bitcoin. And you can see on Bitcoin, we have the 2-year weekly bars. These candles represent 5 days, including the holidays, each candle where it closed. And you can see that from that triple top, we were creating higher highs. And I said to everybody, be careful at the 125, 123 800. I said, be careful in case we do end up losing, because Bitcoin was getting a little bit exhausted. Everybody was screaming 150,000 on the charts instead of looking at the technicals and saying, hey, my 50 simple moving average has been tested, once, twice, 3 times. And now I'm losing the 50 simple moving average, and I lost the 18, and we fell through that 9800,000 where there was a lot of consolidation and the point of control. I did lose most where the volume happened in that 2-year candle. And you can see where the low volume is. Consider this is the canyon and this is the valley. The 74,500, 400 area in this wick that was retested, you have a gap here. Does this continue to go down to the 116 SMA, find support here to bounce? Because the time spent was lower in those 2 years, so the sentiment should be lower. But in case I get a reversal back up on that wick on that Friday's candle and reverse back to the backside, I'm paying attention to the between the 90,000 and 92,000 if it finds support or gets rejection and falls back in. So this is on Bitcoin. Let's go to the next slide. And I have here the Russell 2000. You can see the Russell, which is the IWM or the IWN, which has the value. The IWF is large. I mean, the Russell 1000, but it includes tech sectors in it, such as NVDA, which represents 16%. There's a discrepancy there because you can see in the Russell, there must have been a little bit more rotation in the Russell, because you can see that Thursday candle down, then the big rally back up, and we closed right on last month range, just slightly underneath it. But what I wanted to do is here show you that every Thursday of every week, you can see that big candle down, that big candle down, that big candle down here, sold off, and you had the other candle on Thursday sell off. Because if I go back to the S&P, what I wanted to show you, or the Nasdaq, this is the Thursday's candle. You can see it. This Thursday, Wednesday, Tuesday, Monday, Friday. This is the Thursday candle. Then you can see this is the Friday candle. You get wicks up, and the Thursdays were selling off. So we got to trade what we see, not what we think. And remember, on the charts, you want to be not biased to any side and understand the levels. Last but not least, I showed you the Russell. Here we have the Russell on a 12-hour candle, which is 2 candle to represent the daily range instead of using the daily. What I wanted to show you is that that sell off in the over on Thursday and the Friday rally back up, basically to come into that range on the monthly bar between the highs and lows on the monthly in relationship to the lows of the 3-month high and 3-month low. And if we end up rallying and clearing the 200 SMA and the 18, I'm looking for the backside of F3, which is 38, F5 is 50%, and 61% to the time node and the point of control. If I end up creating a little higher high at the 38 or falling, or we fall back in, remember the Russell, there may be a little bit rotation into defensive stock, and pay attention to them, as well as small cap. Last but not least, here I have the up volume, down volume on the New York Composite, which represents part of the S&P. Every time we had 100,000 to 125, from 800 million to 1. 1,250,000 on the volume spikes up or volume down. It's telling me, hey, this was the December last year, 2024 highs, and this was the January, February highs. And you can notice when we had a spike down and a spike up in the up and down volume, we had a reset back down in April and rallied back up. We had these two bottoms here every time we bottomed out. We kind of grinded higher where the RSI was diverging. When we created this high, and this high, the RSI was making a lower highs. So this is very important. And you can see here, we spiked back up into that range. I am very careful in case there's going to be a sell-off because everybody's talking about a bearish tone, bearish sentiment. We may get the Christmas rally, we may not. I'm not biased. I'm going to trade what the charts offer us. And remember, from day to day, you take it day by day, week by week, month by month, and understand the risk in the profile. Remember, here we have Google, which is Chat GPT, X, Grok, Cloud, DeepSeek, Microsoft, Meta. You can see the representation, people clicking to check out Chat GPT per month. These are the hits. You can see if I even combine Gemini, DeepSeek, and Cloud, you can see here they're not even getting X amount of percentage what Chat GPT is doing. Even Microsoft doesn't have a 1 billion, it has 957. So remember, we're going to trade in the tech sector. If I look at the overall tech sector or the Fantastic Seven, the total return for those 7 companies should be around 28% compounding annually. But unfortunately, the earning report is great and everything is great. They only made about 18%. If you want to learn a little bit more and ask us how, get in contact with us. We're here to help. Remember to check us out at solstice.axel.com or get in contact with us here at the phone number. Smash the like button. Let's go to the first slide that I did up here. We'll just go back to here so everybody sees it. I put the S&P 500 on a 6-month, and I wanted to show the range low and the range high on that 6-month, but this is last month range high and low, and I wanted to do the Fibonacci on it so everyone can see it. We can grab the high to this low, and we can see where the extensions are from high to low. We tested that 100% or those triple bottom, the consolidate. I had this over here when we came up on that linear regression uptrend channel, and we tested it up here. We broke out of it, came back to it, and ran back out. But now we tested it. If we're going to lose the 116 SMA in this consolidation, I'm looking for the backside of these two candle and the double bottom right up in this area if we end up coming down to that area. If we end up rallying back up, I'm paying attention to the symmetrical triangle in the backside of this channel and F3, which would be the 38.2 fib on the charts. You can see my highs and lows where my 50% is in relationship to the, I did the measured move instead of the fib. Hold on, let's do this on the measured. Remove this. Let's do the Fibonacci. Sorry, guys. Let's get the fibs. And you can see where they are in relationship to that move up. That's my 25%. My 38% would be here, and my 50% would be the yellow line on that last month range. If I end up coming back up in this area, if I end up falling, if we lose this area, you lose the 116 SMA, the 23% would be the consolidation in this volume and the profile, and eventually back to the downside of that 38%, which matches these consolidation, look down, break up, come back to this area, tested once, twice, 3 times, and rallied up. So this is what I see on the charts. But if I take the 5-day range on the chart here and I break it down on the chart from the daily to a 30-day high low, you can see the weekly high was here. This is the Monday high to the low. So if I do a measurement move on the charts from high to low, these are my extensions to the bottom, and you can edit the property to make them different color. Edit the property. We can put that property into blue. So we have all these colors symmetric, they're looking symmetrical from highs to lows. In case if I end up coming down on that short week, or we get a rally into the Thanksgiving back to the 50%, clearing the Thursday candle back to the 61 or the 100% measured move on last week's range. Remember, it's a short week. They may squeeze either way. We're going to trade what the RSI divergence and the levels are into that single print which we tested on the S&P 500. Let's look at the S&P, the semiconductor, and what I want to do is show you this on a daily. We're going to go to a time frame custom, and I'm going to go here instead of the annual charts. We're going to go here. We're going to put it on a 6-1. You can see it, and we're going to push instead of the hourly. We're going to put it on daily. Push OK, and you can see where the highs and lows, that big candle, sell off on Thursday. That's another sell off on Thursday. You can see the Friday rallies up. Every time we had a candle on Thursday down, we rallied up. Thursday down, rallied up. And this was, the push down as well, then the Friday. So we got to trade what the charts offer us, not what we think. And you can see that this is consolidation. You have on the semiconductor, this gap here, as well as this gap down here, coming back to this consolidation in the 116, where the gap is, or the backside of these candles, or the midpoint of it, is very important in the semiconductor because there is rotation. Let's go clean up the charts. We're going to go to style. We're going to go load. We're going to load here the clean charts. I'm not going to put any moving averages. We're just going to go with clean charts to show where the gaps are and the volume in relationship to the overall ranges. That's on SMH. Let's take a look at you can see XLK came in to that small gap, and you can see coming down here, we filled a partial gap, not 100% on XLK, and the rally back up. If there's going to be continuation, you can see the extensions from last year's range. That was the 100%. We went 123, 138, 150, 161, 178, 200%. And we got this island down here, which I did not mark, and we fell down in that Thursday's candles being, sharp reversals back down, while the Friday rally back up, to cover part of that major loss, because this is just a mental thing. And we can see that these gaps are here coming back to this consolidation, or the backside of these breakouts. 1, 2, 3, 4 would be important for us to see what XLK does on the tech sector. Let's take a look at XLV. This is the defensive in the healthcare sector. You can see we created a new high on Friday on that push up, but you have to be aware of that uptrend channel and the moving averages up here in case things do rotate to defensive stocks. And do one more. You can see XLF, the financial is a little bit pressurized. You can see XL IEF, which is the part of the 7-10-year bonds. You can see that, it's trying to rally back up in the bonds. And if you do TBT, which is the ultra, you can see this is the bonds on the 20-year TLT. And you can see the difference that the rates is trying to nickel back up. Let's see what the Fed announcement does, if they're going to be dovish or hawkish. And remember what J. Powell says in relationship to the IWM, which is the Russell 2000, and IWF because it's got a little bit of weight in the tech sector. And one of them is, owning 16% of the NVDA, and you can see that big candle on the sell-off fell sharply and couldn't recover like the IWM, just came back up. And this was the gap in this area where we tested it. If there's going to be continuation, you look for the backside of these candles here on the Russell. Let's now take NVDA itself. And this is, you have to be a little bit cautious and understand that that double top that was created up here, I consider this a shoulder. And, this was a lot of consolidation, the neck of it, and creating another shoulder here and coming down to it. If I take the distance from here to here and I duplicate it, or I just kind of gonna do something which is a little bit more fun on the monthly, you can see that range here. We're going to just duplicate it to the downside, or even using that body duplicate the drawing. And if I take this duplication from that neck of it, which was tested here, this is the, even coming back halfway to this area, or 1/3 of it would be this consolidation here where we broke up, looked up, came back in, rallied up, created that shoulder. That's the head of it, and that's the right shoulder. If an NVDA has to run back up in the tech sector, you have to pay attention to these things in relationship to the overall moves and understand the risk you are putting yourself into. And I want to show you how sharply it sold off. It's in a bearish tone, lost that downtrend channel. It's consolidating in this area. If there's going to be continuation, we're going to look back to the upside and the backside of this channel. If it finds support or resistance, if it falls in, we look for the backside of this consolidation and where the breakout, where it created the breakout. This is considered the shoulder, this is the neck, this is the other shoulder, which is on an angle. Coming back to this area would be important in pltr. Let's do google, and you can see in Google, I do have version control due to Chat GPT and the hits they're getting. They're doing the right thing. And, compared to Meta, Microsoft, and all the other companies, I do have these version control point and these little gaps in here. We got, this gap here. We got another gap here. I mean, I don't want to go through them. Even if I look from here to this high, I know Google had an inside candle in here. You can see it. The look above close in on Thursday took out the 291 and 50 cents and came back inside to close in there. If there's going to be sentiment bullish, look for the upside. If it's going to fall, look for the backside of this channel on Google. Let's go do the SPY. I just want to show SPY, the electronic traded, because most people tell me this is the linear regression on the weekly chart. You can see it's coming in from 1/16, 2018, 12/16, 2021, and coming up to this area. You created this shoulder. This is the head of it. This is the other shoulder, and falling down. This candle was not able to take it, and I'm paying attention to the backside of these candles and this consolidation back here. Let's take a look at the QQQ. And I'll end it with one note. Remember, we're going to trade what we see. There's a couple of different ideas. Pay attention to them. Understand the risk. And this is on QQQ. You can see that the body of this candle, when it came back up, couldn't get to the consolidation and that gap down on profile in QQQ. Other than that, let's go back to micro ES. And what I wanted to do here in the micro ES, go to the style. I'm sorry, not the style. Go in the time frame. We're going to do here intraday. We're going to do a little bit more than 90 days. And I'm going to do 12 hours for everyone just to make this a little bit more noticeable. And the reason why I want to show this, I wanted to show this consolidation where it bottomed out, tried to rally, and eventually we got the breakup. If this consolidation here is not acting as support here on the weekly from the high and low on the week from Monday through Friday's low and that rally back up on Friday, and we cannot clear the support. You can see the support and resistance the machine did them on the shorter time frame, a little bit differently than the monthly that we did for last month's range. We can see that if we end up falling, we can see that 25 to 23% and eventually the 50% of consolidation and the 38.2. But if I end up rallying, I am paying attention to the 38% and the 23 if it's going to hold us to take us back to 38 and eventually the 50, the backside of this channel and that downtrend channel. So very important. We're going to trade what we see, not what we think. And remember, we're creating lower highs and lower lows on the bottom. Until I see this flip to the other side, then my thinking will become more bullish. I trade what the charts offer us using an RSI, stochastic. Remember, those are lagging indicators unless you use technical setups like we do. We can see that there on the short time frame it's down, midterm down, long term down. There's weakness on pursuit of an uptrust in relationship to the Thursday's candle. So trade the charts in front of you. I hope this video was helpful. You have questions, once again, get in contact with us at Solstice or Axel, and we're here to help. Over and